All right, everybody, welcome everybody to this webinar. I have Nick Baldo, who's an expert in real estate bookkeeping. My name is Hector Garcia. I'm a CPA and a QuickBooks expert. And finally, I get to interview Nick. I've been following some of the work that he's done over the years. And we're going to pick his brain a little bit about how he ended up building this program, the real estate bookkeeping training program. And also kind of like what's the future of accounting and bookkeeping when it comes to real estate. So, hey, Nick, how are you?
Hey, I'm great. Thanks so much for having me. So excited to be here.
The pleasure is mine, man. Can you give us an idea of how you came about just being the real estate bookkeeping expert?
Yeah. Well, everything I do comes from I'd say scratching my own itch. So first and foremost, I'm an investor myself. I'm a real estate investor. I got started while I was working a corporate job about 15 years ago, flipping houses, buying rental properties. And as I was doing that work, I found that I needed to run the numbers and I didn't know how. And so I signed up, like a lot of people do, sign up for QuickBooks and like, oh, this software will do it for me. And quickly realized that no way. We need to think about things a little bit differently. And so working with a bunch of CPAs and really trying to solve this problem for my own business, I established a set of strategies and really a system to get QuickBooks Online to work for me and my business so that I could spend way less time reconciling and fixing things and beating my head against the wall prepping for taxes and more time doing deals and getting deals. And as I developed those strategies, I started teaching via YouTube and I got some students, some clients. I built some programs, which we'll talk about a little bit as well. And really, I just keep it going. So as I develop anything from my own business, which I still run to this day, I implement it with the courses that I offer to my students as well.
Yeah, that's awesome. I've always taught QuickBooks as an accountant, as a CPA, and I've always brought in people in my webinars, in my YouTube videos that were also accountants. It's actually the first time that I'm going to have a non-accountant teach me a little bit about QuickBooks for this specific niche of real estate. So, Nick, let's get right on it to tell us about uh, pretty much from soup to nuts, everything that a full real estate accounting course would include. And let's dive into the three must-do strategies for real estate investing bookkeeping that we can cover within the hour of this webinar.
Awesome. Sounds good. I appreciate the opportunity. And the real focus of this entire presentation and what we're going to talk about is that this is a niche, and I know because I'm in it, that needs good accountants and good bookkeepers. And if you can get this stuff right and become an expert, the sky's the limit as far as what you can charge and what kind of clients you can get. So let's get into it. So what we're going to talk about is how we can help our clients, specifically real estate investing clients, shift within their business. So QuickBooks Online isn't just like a burden for them, but it actually unlocks the potential of their business. And they see the reports that they need and they can make key decisions proactively. And that's a big thing, being a business owner myself, is if we wait until April or later, when we file our taxes for the previous year, it's too late to make those key decisions to pivot within our business. So that's what we're going to focus on. If you can unlock that for your clients, we're talking about big time income potential for you as a bookkeeper. So real quick, we talked a little bit about this. I started at IBM as a consultant, and we're not going to get into all these specific businesses, but what that did for me as a consultant working with Fortune 100 companies is it taught me to think about process and taught me to think about pain. And when I have that within my own business, or when I see that among my students, we unlock the solution by digging into the process. And that's exactly what I do. So these are the businesses that I still run today. Oakvale Homes and Development. That's my building business, my real estate investing business. That feeds Income Digs. Income Digs is where I teach. And I wouldn't have Income Digs if I didn't have Oakvale, meaning I only teach what I do. And therefore, every single day, I'm learning more in my business and I'm bringing it through to you via Income Digs. So I teach exactly what I do. I've literally spent hundreds of hours testing and retesting these strategies. I had to get it right. I knew there was a better way. I use QuickBooks Online every single day within my own business, and I work one-on-one with investors and bookkeepers every day. What's cool about that, what I think is so important, is that real estate has a lot of different nuances and a lot of different types of strategies. And so when I work with others, individuals like yourselves, it helps me build out that breadth so I can help as many people as possible. So QuickBooks Online was not made for real estate investors, right? Those awesome commercials for QuickBooks Online where, we're swiping our card at the flower shop and then everything populates beautifully. That's not how it works for real estate because we're a little bit more complicated, unfortunately. And so educating ourselves and our investing clients that it needs a little bit of work is essential. So we're a little bit different in that we have multiple properties, right? Big challenge, big thing that you need to solve. Multiple business entities, right? Real estate investors form all these different LLCs. We deal with depreciation, we have job costing, we have business partners and investors, and we have really complex loans, hard money loans, and so much more. So these are all the different things that we need to think about. These are the challenges that the investors out there have, and they're trying to solve them themselves, and then they're trying to solve them with a bookkeeper who is just more of a generalist, and they're running into a wall. And so we need to be able to help them. And generally speaking, these are the types of things that we need to know to serve our real estate investors. We're going to talk about three of these specifically today, but if we don't have a strong grasp on all of these, then we got to get to work, right? Because this niche is in need of really good bookkeepers. And so if we can check a lot of these boxes for our clients, we're going to really increase our income potential here.
Yeah, let's slow down for a second. Can you go back to the last slide? So we have two three-dimensional chart of accounts. That's the core of the whole thing, right? And
Yeah.
how you set up your chart of accounts, how you set up your classes, how you set up your locations, how you set up your customers and your sub-customers. That initial setup is everything. Okay, sometimes, like in my personal experience as a CPA that's worked with a lot of real estate, is they already come with something built, and it's a hot mess because they didn't think of these concepts from the very beginning. I've also found that within the realm of real estate, there's a lot of little branches, like you're talking about real estate investors. These are the people that buy properties and and this is like two branches, either hold it to sell it later. So the property is like inventory, or they hold it, they lease it. If they lease it, they probably improve it. And then maybe they sell it, or maybe they don't. Maybe it's a long-term thing. And then within that, there's also more complex situations where they have a multi-use building that's some of it is commercial, some of it is residential. Commercial has a different sales tax treatment that residential does. Some people do like Airbnb and short term, which also has different sales tax connotations depending on the state that you're in. And that's only within like real estate investors. There's also realtors, right? People that deal
Yeah.
with real estate, but what they do is they provide professional services and they get commissions. That's a whole nother ball game. And then we also have the folks that manage real estate investor properties, and within one set of books, they're bringing in money from different customers, and maybe those customers don't even have a separate entity where they don't do their own accounting. Your record keeping becomes their record keeping as a property manager, and then you have construction, right, which is this whole other ball game. So, which area, just so we can focus in for today's webinar, which areas are we going to be focusing in, or which areas of real estate are we going to be tackling?
Yep. For the most part, we're covering those who buy and rent out properties, probably renovating them as well. That's kind of the one big pocket, short or long term. And those who buy, renovate, and sell, what we traditionally call flippers. So those are the two kind of cohorts that we really target here, really trying to grasp as much of that as we can.
Perfect. And what would you say are the biggest, like before you get started, what is the biggest issue you see with the accounting files? With like, what would you say is like the common thread that people start telling you and you're like, I already know the answer to the question. I already know what you're about to tell me. What is the most common issue you see in real estate investor?
Well, without question, it's you mentioned the term hot mess. That is what we see all the time, and it all comes down with the chart of accounts. We're going to talk about that in a second, but it's adding too many too quickly, not thinking about how the chart of accounts impacts our reports, right? Which is really what these business owners need. And thirdly, not thinking about how we can grow and scale with our chart of accounts. And so that is absolutely the biggest issue we see. We just see this gigantic list and it's not well thought out, it's not well structured, and the whole architecture is broken from day one. And we got to get to work.
And do you find it that for real estate investors, misunderstanding the difference between the cash flow on a property versus the accounting P&L on a property tends to be a big issue as well? Because, for example, just to throw it out there, a mortgage payment is a cash flow out, but it doesn't hit the P&L 100%. The depreciation hits the P&L, but there's no cash flow out. So,
Yeah.
like, do you have like a trick or something up your sleeve to help people understand that piece better, cash flow versus accounting profit?
Yeah, no, that's a great point. Sometimes they want to see they want to like potentially see less profit because the way they analyze is potentially agnostic of whether it's P&L or cash flow. To your point, mortgage payment, debt service, right? I pay principal, I pay interest, it's all one payment. And when they're analyzing a property, they're going to put that all in one place, probably, right? We need to have QuickBooks separate out the principal versus the interest. Okay. And so what we really do when we're teaching this entire process is it's balance sheet, it's P&L. So many people fail to look at the cash flow report and understand what that is. And so we really bring that to the forefront early so that we understand that net income comes into that cash flow report, but look at all these other items, whether positive or negative. As you mentioned, the depreciation is going to show positive on the cash flow report because it's a negative on the net income. So we show that early and we really harp on it that those three reports, not just those two, those three reports are essential to knowing your numbers.
That's awesome. All right, let's jump right to it. Let's go into QuickBooks and let's talk about this chart of accounts.
Cool. Yep. So we'll kind of go through here. We talked about this. We want to get our REI clients really feeling like the reports are easily accessible, well organized, ready to go. We want them to know their numbers more than anything. So 3 must-do QBO strategies for REI bookkeeping. The first we've alluded to, two-dimensional chart of accounts. And you're going to hear me, maybe even Hector talk, three-dimensional. It could be as well, but we have to at least get to a two-dimensional chart of accounts. This is absolutely foundational. So where most of us get it wrong as investors or bookkeepers for investors is we add way too many accounts too quickly, right? We get that bank feed going and we get all excited that, oh, everything flew in and we just, office supplies, software, et cetera, we just add way too much. We think there's just one right way, whether you're seeing somebody, your CPA, or maybe it's even somebody like me, you see my chart of accounts, you think, oh, I must have it exactly like Nick. Maybe, maybe not. Think about your own business and your unique situation. But more than anything, the biggest issue is specifying different accounts for each specific property. We see this all the time. It's not sustainable. It makes our balance sheet and P&L unusable. All right, so the solution is our two-dimensional chart of accounts. Let's see that over in QuickBooks. So what we're talking about, let's start with kind of the wrong way, and we see this all the time, is when we're adding accounts to our chart of accounts. Let's say we're purchasing property. We see an address in the accounts in their sub-accounts, right? So you see 122 Buffalo and then 264 Union, that we have the sub-accounts. Now I like how the sub-accounts are kind of established because we can depreciate some, we can't depreciate others. We want to separate things out. But when we have an address in every single one of these accounts, it leads to an unsustainable reporting structure. And so if we kind of see that flushed out, if I go to a balance sheet, and I have this way in the past just to kind of demonstrate it, a balance sheet with properties listed to that level of specificity, you can see that it grows very long vertically. Okay. And all I have in this set of books right now is the purchase of 3 properties. And I've already got 12 lines on my balance sheet. I don't have anything for bank accounts, for security deposits, for escrow, all that other stuff, right? And so if we think about, well, what would happen as I take on more properties? I'm going to have to go to my chart of accounts and add all those different addresses. And it's really not sustainable. And then what happens if I change my structure? If I want to add a sub account, I have to add it so many ways, right? So this is like the wrong way to do it. And this is what most investors are going to do out of the gate because it's kind of intuitive. We need to go two-dimensional. So we do that in 2 ways. First is we need to set up our chart of accounts to be generic, meaning we need to establish a chart of accounts that does not have an address in it. We're going to store that information elsewhere. Second, we need to decide where and how we're going to track that second attribute, okay? And that's going to be through classes, okay? So QuickBooks Online Plus or beyond, we're going to use classes. You could use customer. We're going to talk about why we might want to keep that available for our third dimension, though. So we're going to encourage you to use classes. So turning that on in our advanced settings here, I have that on right here, okay? Now, what we can do is we can take a transaction. All right, so let's just real quick kind of look at what this transaction is. And it's just one single purchase, and we've put it all in one place. So when we have something like this, class is blank, right? Okay, so what you're going to need to do for your investing clients is probably fix that. How do we do that? We either go back and adjust those transactions or use a journal entry to correct it. And when we do that, we do something like this, where we zero out the initial line items. Okay, so here's my 122, right? We're going to credit that to 0. And now I'm going to debit my generic list and indicate my class. And so what this is in effect doing is it's saying, hey, this account, I need to get rid of it. I need to zero it out. So I'm going to do that right here, and I'm going to correct it right here. Now, you could just go back to those transactions and add the class and change the account. That's fine too. But a lot of times there's a lot of transactions, so we might want to do a cleanup journal entry. Okay, so you're going to have to work that through with your clients. But this is what we do. We eliminate the specific one. We add in the generic one indicating our class, and we do that for all of our fixed asset accounts in this example. And what we're left with then is a really nice balance sheet where we can turn on columns by class, and we can see our information in a really awesome way, right? And now when we buy a new property, what do we have to do? We add a class. That's it, right? We
Nick,
have our architecture set up.
yeah, Nick, before you click on anything else, can you zoom in a little bit on this page just so we can see a little bit
Yeah.
easier? Some people are saying here that they want to see. Zoom in a little bit. If you can control plus, yeah, maybe a little less. Okay.
Yep.
So the concept here is that the original entry, what most people do is they'll create, we're talking about just fixed asset for a second. We're not talking about income and expenses. So most people will create its own separate fixed asset for each piece of property. Now, there's nothing wrong with that accounting wise. The problem is, as you stated, is your chart of account, your balance sheet specifically is going to get so large so quick when you start buying and selling more properties. And also, not to mention that if you're using QuickBooks Online Plus, you're going to have a limit, or even Essentials, you're going to have a limit of 250 accounts that you can have max before you have to jump to advanced. Now, we'll make a case for when you do need to, no matter what, have to upgrade to advanced no matter what. But if you're working with QuickBooks Online Plus, particularly, it's going to be much better, especially if you have less than 40 properties that you're managing. It's going to be much better for you to have a single asset account for the piece of real estate. And if you're the type of person that wants to track land, building, closing costs, improvements, you don't have an example there for improvements, but I assume you add improvements there as well. If you want to track all those separate components of your historical cost of the property, again, land, building, closing costs, improvements, that sort of thing, then you break them down as sub accounts of a one generic fixed asset account called real estate owned or whatever. And then you're going to use classes to open that dimension up. Now, what that does mean is that if you don't show a balance sheet by classes, let's say you show this year compared to last year, you won't see the individual property addresses on the balance sheet. It just means you're going to see real estate value as one lump sum, and that's it. So is that exactly what you're saying? I'm just trying to slow it down here a little bit because you're going pretty fast.
Exactly. Yeah. Yeah. You're right. Yep. Exactly. And so, yeah, as you mentioned, there's nothing wrong with the individual accounts from an accounting perspective, but from a reporting perspective. Now, one area that you might see, this area here, loans, is one where it might make a lot of sense to keep them separate. The biggest reason why would be if we're connecting the bank feed to that. And so that's an area where, I'm flexible, and my students are too. If it makes sense to separate out individual loans there, that's okay. That's fine. But that's way less than if we did all these sub accounts there. So there is a little bit of flexibility here, and you have to think about, what does your client need? How many properties do they have? Like, what is this going to look like, and how many will they have as well? We don't want to pigeonhole ourselves in. But you're completely right. And yes, we'd have, like, number 4 would be our CapEx, and our depreciation would show up there as well.
Yeah, and you're alluding to the loan account being, you breaking that down is because one could be Chase, one could be Bank of America, one could be some local bank, and you want to label those accounts based on the lending institution that's lending the money, because it will make it easier and faster to automate that process via bank feeds, for example. And it's going to be less likely that you have as many loans as you have properties, because sometimes you buy them cash, and you're not going to have sub accounts on loans. That wouldn't make any sense, but you would have sub accounts on the fixed assets. So that's what you're saying. You could be flexible. Like, if you, let's say you all use the same bank or whatever, and you're not automating things through bank feeds, you're comfortable with having one loan called mortgage or conventional loan and spreading those out in that second dimension of classes. But you're seeing that it can make sense to make those individual accounts.
Yep. Yeah. It's kind of on a case by case basis. a lot of investors will maybe have private money or hard money loans as their way in. And so maybe that's got to be separated out by who that lender is. And yeah, that makes complete sense. And for reconciling as well, right? It's really tough to reconcile this account by class. In fact, we probably can't do it using the QuickBooks reconcile feature. We kind of got to do it ourselves manually, right? So definitely open to that. And that could be an area where you split it out for sure.
Well, one of the things what I found valuable, and this is what one of my clients actually did this. I won't take credit for this. He had like 12 or 13 loans at any point in time, all the time. And he would put next to each loan account a little symbol for whether or not they had a prepayment penalty. I think it was
Mm.
like a star or a little hashtag or something. And then he would also put in parentheses the rate, the interest rate on it. That way, if he wanted to quickly see, like if he comes up with some cash, which loan should he pay down first? He would immediately know, okay, let me just aim for the highest interest loan, the ones that don't have a prepayment penalty, that sort of thing. So that could be a case for separating the loans out and giving it different names. Yeah,
For
have you ever
sure.
run into anything like that?
Yeah, that's a great example. Yeah, we see that often, and it's one of those things that it's QuickBooks can do so much, and sometimes we want what's a way that we can kind of hack to get some of that information here, so I don't have to have a separate spreadsheet. So in the case of your client, that's amazing, right? We can have our source of truth not only is the balance here, which is we want that, but also interest rate, prepayment, a little bit of extra data is always helpful, so that we don't have we're all guilty, right? A million different spreadsheets all floating around. And, so let's have it all here. That's amazing. That's a really good example.
Yeah, and let's go back to that journal entry just because you went kind of quickly. So I want to make sure we clarify what you're showing in that journal entry. So essentially the journal entry that you were showing on the screen, the one that's on the screen now, this is a cleanup journal
That's
entry.
right.
So officially, it was booked into individual separate fixed asset accounts, right? So that's why you see each of the individual sub accounts and they're being credited because at some point before this journal entry, there was an entry doing the debit, right? So like
That's right.
the original purchase or when you actually made the improvements or whatever it is, and then you're reversing the effect in the balance sheet, putting it into this generic account and putting the class. Now, one thing I found pretty interesting is that you give it this one, two, three
Mm.
numbers.
Yeah.
Could you tell me your logic behind that?
Yeah, so it's really a sorting mechanism and a searching mechanism. So if I'm in a transaction and want to find an account, I've just trained myself that land is going to be, one. So we can kind of do that. We can also number within the chart of accounts itself, but I just like to see that order on the balance sheet. So I like to see them as land, building, closing costs. And so that's my only rationale for doing that. I'll do that also on a P&L, specifically for flips or actually rentals as well. So if we try to kind of follow IRS Form 8825 and they've got their list, I'll use that same numbering just so we're doing less work as far as sorting and ordering. Just a little bit of a preference thing that I do.
And Nick, how do you like to see accumulated? If you go back to the balance sheet for a second, how do you like to see accumulated depreciation? Do you like to set up a separate account for that, or you make it a sub account of real estate owned as well?
Yep, I'm going to put it in as, let me just pop this out. I'm going to put it in as the same hierarchy as the others right here. Okay. And
Okay.
and I'm going to that's how I like to do it for my own business.
Yep.
What I had done in the past and some clients like to do is have a separate one per depreciable account so that it's a little bit easier to match up to the tax return how much we've depreciated over time. That's fine, but it just adds more of those sub accounts and it just makes it a little bit messier. So I like to have it all in one place so that, that real estate owned net gives me, that calculation happens real quick and it's really easy on the eyes as well. So,
Yeah, and Nick, just to be clear, a lot of people watching this webinar, they're accountants, and
yeah,
you are not trying to tell accountants this is how it should be or it shouldn't be. As a matter of fact, you're saying I am an investor myself. I built this so it can make sense to me. And I find that a lot of accountants want it to make sense to them and to the
yeah,
tax return, but they forget that you're working for the business owner. The business owner is hiring an accountant probably because they have to do taxes, but the true value is not on the commodity of doing the tax return. The true value is giving the owner, the manager, a decision making tool. And what you're showing us is from your experience, you yourself as an investor, what helps you. So you're not trying to make it match a tax return, you're trying to make it match how you think, right?
Right. Yeah, that's exactly it. And I appreciate you saying that too. And I'm not one to say you have to do it this way, and I'm not one to pretend to be a CPA. You guys have a lot more knowledge, and some things have to be done a certain way. But as you mentioned, first and foremost, I and we as investors, we need reports to make decisions. And oftentimes, I feel like the two can coexist. The reports that we use to make key decisions for our business are often really close to 100% ready for taxes. Might need a little tweaking here and there, a little bit more interpretation, but generally, if you have somebody doing this well, meaning the data's up to date, everything's reconciled together, you're gonna have very little trouble getting it converted to taxes. And I think you're gonna find that investors are gonna use it more, and meaning the information is more accurate as well. If they can't do what they need to do for their business, they're not gonna log into QuickBooks, they're not gonna do their categorization, and the data is not going to be accurate, and then we're going to spend more time anyways. And so the more we use the software because it works for us, the better it's going to be from a data perspective.
Awesome. So I'd like to see this in the P&L version. So could you show me the example on the
Yeah, for
P&L?
sure. Yeah. Yep. So yeah, and you know what? The balance sheet to me, it kind of makes sense where people might intuitively list separate accounts. I really, I really cannot believe that sometimes we see a P&L with 123 Main Street rental income, 456 Maple rental income. That is just a really scary idea, because now we're doing, we have more accounts. So what we're showing here is, kind of a profit and loss by property again. So we have a P&L up. We're displaying columns by classes. My test data is not that awesome here, but you can see kind of where it's coming from. Again, a generic list. I use cost of goods sold. That's another thing. I don't really have a separate thing to talk about here. This is a controversial one as well, but my big thing with cost of goods sold is as an investor, again, we need to know gross profit. I need to know what the gross profit of my rentals is before I take out my business expenses. So I'm often teaching a cost of goods sold is everything that kind of shows up on Form 8825, Schedule E. And we map to those. That gives me my gross profit. And then, oh yeah, I have this business that I'm running, and then I have general business expenses beyond that. Now that's an area I get some pushback from bookkeepers and accountants that, well, it's not supposed to be cost of goods sold. It's not physical. And again, this is me as a business owner. We can easily convert that to expenses on the tax return. But for me as a business owner, I need to see that gross profit at all times.
Yeah, let's expand on that a little bit. Expand the gross profit for a second. I mean, the cost of goods sold for a second
Yeah.
account. Okay. And then zoom in a little bit more just so we can see a little bit bigger. So what you're saying here is that you as a business owner, you're trying to separate what are the operating costs of the property versus the operating costs of your general investment business. And the best way for you visually is to have a subgrouping of your operating expenses in cost of goods sold. So it's not that you are saying that the term cost of goods sold to you really means this or means that. It's just the only place I have in QuickBooks to kind of separate my two types of expenses is cost of goods sold versus expenses. And then when it comes down to putting it in the Schedule E in the tax return, hey, just ignore the fact that it says cost of goods sold in QuickBooks. Just assume it's just an operating expense. That's why you have the little numbers there, 7, 8, 9. None of those matches Schedule E, but you could even match the Schedule E with the numbers and make it even more clear and easy for the user to understand. But the point here is that if you have an expense that you are going to add a class to, it should be in this cost of goods sold grouping. But if the expense you don't add a class to, then you have it on the operating expenses. But they're both operating expenses, right? So that's the point you're making. But to you, as an investor, the gross profit is the almost like the cash flow profitability of each property, right? Is that what it is? I'm trying to understand,
Exactly true. Yep,
Okay.
exactly true. I want to know, is this property profitable on its own and how profitable as a factor of the rent I get, or if it's a flip, the sales price, what's that percentage? Because that's a metric, that's a KPI. As I'm analyzing a property, I'm thinking, what do I want it to be? That would help me calculate that. And then from there, we take off the business expenses. And to your point, exactly, like that's kind of the only place to do it. QuickBooks does that calculation for me. It gives me that gross profit. And so we're checking that box. And all we have to do is just the mapping exercise come tax time to, as I think you mentioned, right? Like forget that it says cost of goods sold, just put it where it should go.
Yeah. And you did mention before we started that this particular chart of accounts, you make that available for people if people want to download it
Yeah.
and play with it.
Yep. Yeah, I have, and we will have a link in there, but I have this kind of ultimate chart of accounts, which is, it's a starting point. I again don't want somebody to take this and say, oh, this is perfect for my business, but kind of what I'm showing here, the match to 8825 is available for free download. So go ahead and grab that
Yeah.
and make use of it for sure.
And people can use it as a reference point. They can try to import it into their QuickBooks.
Yeah.
That's totally open for them. Obviously, you don't include the classes because that's going to be personal per property.
Specific, yeah.
Now you have this group that says flips. Like, do you are you were you planning to cover that? Because I don't want to,
Yeah, we'll
like
kind of chat on that with the
okay.
next one, actually. Yeah, we'll get into that a little bit with our next kind of trick, our next strategy, if that
Yeah,
is okay with
cool.
you. All right.
That is it.
Yeah. So let's go bounce back quickly. Let's see what we're going to talk about next. So okay, so job costing with products and services. So if the first thing we talked about, the chart of accounts, two-dimensional chart of accounts, is really foundational, this products and services is to me one of the most underutilized features in QuickBooks Online. And real estate investors, builders, people who do stuff, capital improvements need it. So it adds again an additional dimension to our reporting. It's an optimal link to external software. Okay, so a lot of us are using Builder Trend, or we're using Jobber or something like that, and they have cost codes. That's the word they use, cost code. And we all use cost codes and cost category when we analyze, but we're failing. A lot of folks are failing to track actuals within QuickBooks Online, and using products and services is the key to do that. So it's one of the most underutilized features for sure. Categories, I'm going to show you really quick why a lot of people will add them as chart of accounts, similar to what we just talked about. We have a gigantic P&L, a gigantic balance sheet. We don't want to continuously change our chart of accounts either. All right. So we need to use something else. We're going to turn on the items table. You probably know how to do this, but I'm going to show you why we need to do it and how, in what context it makes sense for investors. All right. So let's bounce over to QuickBooks and I'll show you what I mean. Now, before I get into, again, the right way, I'm just going to a separate set of books here. This is what we see a lot before I do, what are cost codes? Let's just make sure we're clear on what that is. And so an investor is going to analyze a property, and this is just an example like analysis sheet. And when they do, they're going to think about how much they're going to spend in various areas, right? And everybody's list is going to be different. I have a list that you guys can have as well, but it's cost categories. Okay, and we budget to this level of specificity, but we don't track our actuals, okay? Or we do the wrong way. And so the most common way that people think to do it intuitively is, again, within the chart of accounts. You're gonna see a gigantic list of cost codes as either cost of goods sold or expenses. Okay, and again, that intuitively makes sense. Like those are my categories, right? But some builders, some investors, depending on what type of work they do, this list can be 50, 75, 150, 200 long, and there's nothing wrong with that. They need that level of specificity, right? So again, that makes our P&L just way too big. And so, to kind of demonstrate that, if I see a P&L with all these categories, and this is only like 20, right? It's just too big. And of course we can collapse it, but it's still just too much. We don't need that. Can we get the best of both worlds? That's what we're after with products and services. All right.
Yeah, Nick,
So
let's peel back for a second, just because you are a real estate investor, so, and like as accountants, we look at all this stuff and it's like, oh, okay, yeah, building permits, demolition materials, windows, exterior windows, floor, drywall. This is just improvements to the property. Like we don't think of it in this level of details, but you do. So I wanted to kind of like take a step back
sure.
as a real estate investor before you buy a property, because I think that's what you're trying to tell us. Listen, before I buy a property, I look at a piece of property and, let's use the term that we hear on TV, a fixer-upper, right? So I'm looking at a property, I'm looking at a fixer-upper, and the property is whatever, $300,000. And in my mind, I can, because I know what a 3-2 in this zip code I can get rental-wise is about, let's say, $3,000 a month. So when I do my cash flow calculator, I backtrack, the $300,000 of the property plus the $75,000 I have budgeted to make improvements of it. And then after you add these two together, I have my spreadsheet that tells me I can, cash flow 10% ROI on my investment or whatever.
Yep.
This stuff happens prior to buying a property. And this is accounting terms. Most accountants just tell their customers, yeah, don't track all that. Put that on the spreadsheet. We're just gonna put it to building improvements. And this is what frustrates people like you with accountants and CPAs, that they're like, they keep telling me to go back to my spreadsheet, and then you no longer feel that QuickBooks is your decision-making tool. You feel QuickBooks is your accountant's decision-making tool on tax,
Yeah.
and then go back to my spreadsheet. So I think what you're trying to tell us is, hey, if you have a client that's a real estate investor, they want to track this stuff in a single place. And to an accountant, it feels like a huge inconvenience, obviously, to put 30, 40 accounts in a chart of accounts, under cost coach or whatever. And like you said, maybe it's in expenses, which is wrong anyway. Maybe it's in assets, which is probably right, but then it makes your balance sheet completely unmanageable. So what you're saying is there is a happy medium here, which is allow the business owner, the real estate investor, to go ham on all these details, and then you're gonna point all these items to leasehold improvements anyway, but then
Yep.
give you guys the ability to pull those reports if you need to. Is that what you're telling us?
Exactly. It's the best of both worlds. Everybody can be happy. We can get the detail and we get a nice, neat report. And
All
that's,
right, so show us the report then.
yeah. So, okay. So again, what we do, products and services, right? So we need to add our list of cost codes. Now, real quick, I'll just show you. Again, I have a download. You can check this out. I have kind of like two versions here. What I've seen like a simple one. This is people that are maybe flipping a little bit quicker and they're not getting to that super high level of detail. And then I have a more complex one. This is actually something a little bit more like I use because we do get very detailed into it. This is very long. Okay, so these are two examples. Check them out. They're just examples, starting points. But these are cost codes. I am not saying you should add these as accounts. We're going to add those as products and services. Okay, something like this. And when we do, a lot of people don't realize what we can do with that is we can map the purchase to an expense account. Now, that expense account doesn't have to be on the P&L. It could be on your balance sheet. And Hector, in theory, it probably should be on the balance sheet. But another thing that I do, a lot of my clients like to see like a projects report. They like to see their cost of a renovation hit the P&L at least temporarily. Okay, so this is, again, a case-by-case thing. This, cost code, this product and services, this expenditure will probably end up on the balance sheet. But what a lot of us like to do is have it hit, in this case, this is subcontractors or cost of goods sold. I'll show you this on the report. Have it hit the P&L at least temporarily. And then if we need to balance sheet, if we need to transfer it over to the balance sheet, we do so with a journal entry. But before we get there, let me show you what that could look like. So we take kind of the same thing we're looking at, where instead of having 50 items there, I have 2, 3, or 1, right? Improvements. It doesn't even have to be split up to this level. It shouldn't be more than 2, 3, 4. It should really just be 2 or 3. Okay, materials, subcontractors, maybe labor is another one. Okay, and on my P&L, it's super nice and neat. The bookkeeper should have everything they need. And me as the investor, we can drill down into this report. And on QuickBooks, I can see, if I group by product and service, I can see all that level of detail. Okay, I'm seeing everything I need. And I can do whatever I want with this now, whether that's exporting it to analyze, whether it's linking it up with an external software like Builder Trend. This I can now compare against my budget and see like, hey, I estimated this, I spent that. How am I doing? I better inform myself for this one and the next one. All right. And so that's what we're after. And this transaction, all we're doing is we're turning on the items table. And instead of using category here, instead of me indicating here, subcontractors, instead of doing that, we're going to use the items table instead. And we've already set that up to map to the appropriate account in the balance sheet or the profit and loss.
Right. So, so we have a whole bunch of cost codes, and they can be grouped with subcategories too. You have a whole bunch of
Yes.
cost codes that go into the like the budget level. Like again, as a real estate investor, you look at a property and you're like, all right, we got like at least $5,000 worth of floors. We got $10,000 of repairs in the roof. We got $3,000 painting. We have, another $3,500 of this. Okay, in your mind, you're building a little budget of how much you're going to spend at the materials, subcontractor, maybe even rental equipment level. And even within that, there's multiple sub things like, okay, Mike, my plumber is going to do this, and John, my drywall guy is going to do this, and Mary, my floor person is going to do that. So like in your mind, you want to be able to break it down and sort of do your pre-budget and see how you performed, just in case in the future you see another property that looks and smells like one that you lost your money on 2 years ago, that you have like real history to go back and go, you know what? Maybe I shouldn't invest in this property, or maybe I should offer $30,000 less, or not take the deal, walk away, because it did come back and sting me, because I remember and I have the record right there, and I'm not going back to a spreadsheet. I'm going back to QuickBooks. So I like that a lot, and I wanted something that you said, going back to this. This is where people freak out, where you say, well, as an investor, I want to see it on the P&L, even though as an accountant, I know it doesn't belong on the P&L.
Yeah.
So is there a distinction? Like, what is the distinction to you? Like, why you want to see these things on the P&L when you know deep inside that they should be on the balance sheet, for example?
Great question. So what an investor wants to see, this this kind of investment report thing, they're all going to have something like this. It's not going to look the same, of course, but they're all going to have something like this profit summary. Like, this is on a flip example. Okay, hey, I'm going to sell it for that. I'm going to buy it, and this is all P&L thinking right now on a very acute project. Do I make money or not? They want to translate this into QBO, and if we can do that, at least temporarily, we can check that box for them. And then on the accounting side, we can do a balance sheet transfer. And I coach my students, create a cadence. It could be every month, it could be every quarter. It certainly is every year, to move it to the balance sheet. And so what we do is we take, project reporting. This is where, if we have QBO plus or beyond, this is where, we can see our flip. They love to see this. And I do too. I love to see I sold it for this much, 325, and I spent this much on it. And while I'm working on it, love to see this as well. Now, while I'm working on it, this, the 325 wouldn't be there. So I'd have a negative 190 in my P&L. Well, that's not good for decision-making purposes either. It shows that my business is, just bleeding cash and getting nothing for it. What we do is every month or whatever, we take how much we've spent, purchase price, all these categories, and we simply we credit our cost of goods sold, we debit our inventory or some asset account setup that we have to say, here's my flips in progress. And when we do that, we can actually omit the project on that transfer so that this report stays clean. So we can do it at the class level, right? Maybe even at the customer level, but we leave the project out of that transfer. And that allows us to move it to the balance sheet, take it out of the overall business P&L, but retain my project reporting on this portal here, which they love.
Yeah, this is that a potential third dimension you were talking about.
That's right.
Okay, all right, hold on. So let's break this down briefly. So the context is most flips happen within a year. Like, most of the times, investors never look at a property that says, maybe in 2 years I'll make some money on this. Like, people don't think about that when they're flipping, right? They say, how much is going to cost me? How much can I repair for? How much can I, or improve it? How much can I sell it for? The fact that there's a calendar tax year is a total arbitrary thing that doesn't affect real estate investors. The fact that you started in November and ended in March doesn't change the fact that you look at the whole transaction from beginning to end, ignoring the tax consequences. Like, you look at from the beginning to the end. Us as accountants, we're so like focused on the tax year that we want to put this in the balance sheet and then move it from the balance sheet into the P&L. But then you're asking a non-accountant to look at two reports and evaluate their projects based on two reports. You go, yeah, yeah, look at the P&L, but also look at the balance sheet. But also remember, the stuff in the balance sheet is going to move to the P&L. So just keep that in mind. That's just too much for an investor to think about. So what you're suggesting us to do is to create this parallel world, okay, where you actually treat every flip as if there was no balance. Like balance sheets don't exist in a flip. Okay. So when you sell it, it goes into your income. When you spend anything on it, we're talking about the initial purchase, the closing costs, the land, whatever the holding costs, rehabbing, improving it, all that stuff goes in the P&L with a project, a customer project assigned to it. Then for the tax return, you do a journal entry where you remove it from the cost of goods sold account, put it in the balance sheet. We're good to go with the IRS, but you omit the customer job information so you can continue to look at projects here and see your profitability on the whole project, regardless of whether it took a year or two or across the tax year. So you always will see each deal from beginning to end in this screen, and your balance sheet will always be cleaned up on the balance sheet when it's supposed to, and the P&L when it's supposed to. And you're truly asking us accountants to do more work. You're saying do more work for your clients, but you could charge more. That's what you're saying, right? Correct?
Yeah, absolutely. And that's what for all of this, it's like if we can deliver these reports and this level of, accuracy for what they want, we can charge so much more. We can charge so much more. I have students who are just killing it because they're setting this stuff up and they're getting aha moments from their customer. I didn't know you could do that in QuickBooks. I thought it was just for taxes, right? And so if we can turn on those light bulbs for our customers and they're successful and they're doing more deals and they're scaling, I wouldn't say that, they don't care what they pay, but if they can get this stuff, it's a small expense to them, even if it's at a really high rate. So you're completely right. We have to think outside of the box a little bit. What does the business owner need? That's what we're after.
Now, one thing I'll tell you, Nick, it did not occur to me this thing. Like I'm literally learning this right
Cool.
now. I'm learning from you something. It didn't occur to me that I could just adjust it out. Can you show me that adjustment? Like just show us how
Yeah.
you fix this
I wonder,
situation.
I could definitely, yeah, I don't know if the balance sheet will look good, but I'll just take, so what I do with it is let's say I reached the end of a year here and I haven't sold it yet, probably. So let's say I just have the 190. What you do is you kind of take a screenshot of it or go in a separate tab or something. So I have this open. You want to get, what are these balances? Because you have to move them. And so what I would do with this is, again, on the overall, I don't even know what year that one was, but you probably do it at like 12/31/2023 or whatever, right? We'd have our expense category. So I have my purchase price, right? That's a cost of goods sold. For tax purposes, for your account, you want to get it to zero. So we're going to credit it the exact amount it was 125,000. Okay, now when I indicate the class on this, or even the name, it was at 365. I'm going to do 365 Central Park. I'm going to do the customer. I'm not going to do the project. Okay.
Hmm.
All right. I'm going to do the class. And now what I'm going to do for the balance sheet is I'm going to have something like flips in progress. Okay. So flips in progress, and I'm going to have my purchase price. So now that's my balance sheet account. I'm going to put it on there. Okay. And again, 365 Central Park at the customer level, at the class level. I will not need to do my balance sheet at the project level. All right. There's my purchase price. Now I'm going to do my buying costs. Okay, so cost of goods sold, I'm going to credit at the exact amount. In this case, it was 5,475.
Hmm.
And then I have
And, and
my,
and just curious, why are you putting the customer, even though we're not putting the project name, why are you putting the customer name? Like, is that actually necessary? It's just to make it
no,
easier for
it's
you.
not. The reason I'm doing it is out of habit because some students of mine are not using classes at all. So,
Okay. Yeah, makes
which
sense.
wouldn't really apply here because they wouldn't have access to projects either. But if they didn't have Plus, they might not be using classes. Or
Yeah.
in rare cases, they're using class for some other differentiation. So it's rare, but this would be really, you're correct, probably not necessary. But if they didn't have class indicating our project, then this would be a way of them, still capturing it on the balance sheet to treat customer instead of your
Yeah.
project.
Yeah, that
And so,
makes
I mean,
total
this is
sense.
just a couple of them. You do the same for your rehab costs, et cetera. But this transaction right here is going to put this onto the balance sheet. And what's so cool about it, because I did not indicate a project at all, right? I only went to the customer level, or as you mentioned, I could even leave that blank, but I didn't indicate a project. And the cool thing about that is that will not impact this here.
It
My
won't impact
total,
projects.
when I
Sure.
look at my total P&L, or my total balance sheet, and again, I'm not sure what this is going to look like, so I apologize. Who knows what's in here? But let's just go to 12/31/2023. I'm going to have some stuff in here, flips in progress, right? And
Yeah,
and
if you break it down by class, you might be able to see a little bit
yeah,
better. Yeah. Okay. So you have it in there, and yeah. So you moved it. They say effectively you moved it out, and you may have other transactions in there, but effectively you moved it out of the P&L into the balance sheet where it's supposed to.
yep,
And you have it in, what's interesting on this one is you have it under other current assets. You don't have it in fixed asset. It's the same principle you use for your fixed assets, where you have a one single account and you have all the sub accounts,
right,
for each of the, categories that you like to see: buying cost, debt service, holding cost, purchase price, just like you have land, building, capex, whatever. But you have it under current asset because the concept is flippers. Real estate is inventory. We don't depreciate it, right?
that's right, that's right, exactly right. Yep. So how we differentiate it. Your long-term stuff, you're holding it definitely longer than a year and beyond. You're going to depreciate it. That should absolutely be in your fixed assets. This is more transactional, as you mentioned, probably less than a year, at most a year and a half, whatever. Maybe I bought something in November, right? I'm going to have to span over that tax
Right.
year. So, exactly.
That makes sense. Sorry to interrupt you. It's just that this
That's
is
all
really
good.
interesting stuff. So you have one more super trick
Yeah,
or
yeah. Let's get to the next one. Yep.
yeah.
Cool. Thank you. No, I love the questions. Okay, so next one. This is like a game changer. Okay, so these are all really important, but this is one that if you can crack this for a pretty successful investor, the investors who are going to need this probably have a lot of good stuff going on. We're talking big time income implications. So multiple business entities in one subscription. Okay. Again, controversial, right? QuickBooks, don't ask them to do this. They're going to say no. But real estate investors, we're a little bit different in that we just form entities all the time. We just get new LLCs. We get single asset LLCs to hold this property or hold that property. It's not a crazy concept to run into a real estate investor with 10 entities, 20 entities, maybe even more. Okay. And so if you were to ask QuickBooks, or if you were to ask kind of a generic bookkeeper accountant, okay, I have all these entities. What do I do? Well, they're going to say sign up for a different subscription. Of course, that costs a lot of money. But beyond that, my problem with that and my students' problem with that is the setup and tracking everything in multiple logins. So this strategy, I'm going to admit, a little advanced. We'll get into it a little bit, but there's a lot to this. We can have one unified setup, okay, portfolio wide or individual entity reporting. We can do some filtering. We can do some cool stuff with that. Of course, we're going to save money on our QuickBooks subscriptions as well. So this requires QuickBooks Online Plus or beyond. You might need to get it into advanced based on limits on classes and locations. We're going to use location tracking. I'm adamant about that versus classes. Okay, I think classes belong to the property. Location is great for this. We're going to establish each entity as a location. And now I actually changed that label to be business so that it kind of works a little bit better for how I think. We're going to add that tag to every single transaction. And that is so important. That's like the first important part about this is every single transaction must have a location to it. Okay. Now
And one really quick thing, go back for a second. So each legal entity, each LLC is the most common thing, right? So each LLC would be a location. And sometimes a single LLC could have multiple properties, which is why you would need to have both locations and classes. And sometimes a property could have multiple tenants because you can have obviously a rental property is going to have multiple tenants over a course of years. So then the tenant will be the customer, right? So basically those are like at this point maybe four dimensions, right? So we have the location is the LLC, the class is the physical property that you report in each of the 8825 forms or Schedule E on the tax return, and then the customer job or the customer itself would be the tenant. Now, this concept of business tag, could you show that? Like, let's not assume people know that. Show us what you meant by that.
Yep, yep. So when you turn this on, location tracking is kind of the term. It shows up right where classes in advanced settings under categories, turn on locations. And again, that's the term they use. When I turn that on, I'm going to get the option to label it something different. This doesn't change how it operates, but I'm going to change it to business. Okay.
Yeah,
Now,
because the word location would be confusing and the word property would be
yes.
confusing. Oh, that's great. I love
Yeah.
that.
And so what a lot of people see the word property and their first question is like, well, why don't we use that instead of classes? And it's
Yeah.
like a valid, and it could be used, but the reason I don't is so that it's available for me for this reason, for the location tracking. And you can
Yeah.
see here, one really key distinction is classes can be one class per line, which I find almost everybody wants that, to be able to take an expense or a income item and be able to split it by property. We can't do that with business. And I think that forces this to work, meaning we are able to then have our balance sheet by business work out for us when we do just one per transaction.
Right, because it's the assumption that the separate LLCs, even though maybe they're consolidated in a single tax return, which is also very common, each one should have its own separate bank account, and all the source expenses should come out from each business or each entity. It would be awesome if QBO had the label entity. I think that would be the
I
ultimate.
know.
Because,
Yeah.
but you're saying business means entity, and you're retraining people to think business of entity and never use property, never use location, because people automatically think property and the class is the property.
That's absolutely correct. Yep.
Okay, cool.
So that's our step one. And then what we can do with this, then all every single transaction must have that tag. And so if we get into these, I think I've already done them. They wouldn't be available beyond. Let me just look if I've done this. What happens once we turn it on is that every journal entry, every expense now has this business here. Okay, so we're going to indicate it. Now, what's very common is we have a client who's getting onto this way of working. And so we might, just like we had to do with classes, have to zero some stuff out. And so we would do that. We would leave the business blank there. We're going to populate it in. Okay. Now, that's a journal entry. Almost every other transaction has this label as well, right here. Now, it takes like a new login probably for the business label to come up, but it will change to say business. And we have to indicate that for expenses. We do it also on our banking feed. Now, I guess we could do one quick shout out, Hector, to Right Tool. So one thing we can't do is transfers. Transfers do not have a business. Neither do credit card payments. So we can't use those. Now, that's not a big deal. We all know transfers are shortcuts, right? So we could just categorize. And when we categorize, we have that business here. So you could use Right Tool and eliminate that option to do transfers. That'd be a good thing to do for a client who is using this technique because transfers will not work. All right.
Right. We have to literally force ourselves to avoid using transfers, even with true real transfers, because we want to get out of using those transactions. Because once you use them, if you need to clean them up and they belong to a property, there's no way for you to tie them to a class or a location or a business or a property. And then you're going to be stuck having to delete it and create a journal entry. So you do have to get used to journal entries.
Yes, for sure, for sure. And so now when we do this, and again, this every transaction would have it. Now what we can do, again, from a business owner's perspective, we'll start there, and then we'll kind of talk about tax prep, is I can display my columns by businesses on a balance sheet or a P&L. I would say the P&L, I mean, both are useful from a business owner's perspective. Now, I know I'm talking to bookkeepers and accountants here, so I'll tell you my secret when I'm coaching people on how to do this. I say, don't show this report here. What this is a balance sheet by business, right? I say, don't show this to your accountant because then they're going to know you're using multiple. I mean, you should have that discussion. I'm actually joking, but like they're going to see this and kind of flip out like, hey, every balance sheet should just be unique to the business. And so I said, yes, absolutely. So this is from a business owner's point of view. This balance sheet by business is helpful. How much do I own? Right? Where are things landing? Very few transactions in here. But what I coach them to do is to take your reports and do the customization. So filter this thing down so that, hey, my business is only this 264 union, or let's do this JMB, only this JMB Investments LLC. Now that I've filtered it down, I can kind of get rid of my column, just do a total, and I can save this report. That's what I send to my CPA. As long as my assets equal liabilities and equity, they're getting exactly what they need, right? Me as a business owner, I might like to see it juxtaposed next to each other, but I don't need to. And then we could take this report. If we have multiple properties, we can still do our classes on that, right? So there's my JMB. That's one entity. It's filtered by just that entity. That 264 union entity is not here. But now I have the two properties that are owned by this entity showing up in one single balance sheet. So again, I'm getting kind of, this is, you hear me say best of both worlds a lot, right? Like if I can get what I need as a business owner and my accountant can through filters and through saved reports, and as long as we give the exact things we need, we're both going to win here. But
I think what you're saying is don't tell your accountant that all your entities are on a different QuickBooks Online file because they're going to try to force you to have separate QuickBooks Online files. If you're the accountant, then as long as you're conscious that you understand and you trust that your filtered balance sheet for that specific location by class or by property or for that entity by property, it's good enough. Because the one cool thing that QuickBooks has, and people hate the fact that you can't split businesses or locations in a transaction, is that your balance sheet will always be balanced on a location basis. Like it might not be balanced on a class basis sometimes if you miss a journal entry or something like that, but because you can only have one location per natural transaction, they're always going to be balanced. So you could always count on the locations, or what you're saying, business, to give you a proper balance sheet.
That's right. Yeah, exactly. Yep. Now there is, we talk, this is advanced. So like I make it like, oh, look how easy this stuff is. There's a few things we got to think about. I mean, and we talk about those in some of the course material we have, but first and foremost is that it is possible to do a journal entry whereby you forget or you put one business but you forget it on another one, and you could have a filtered balance sheet for a business where assets don't equal liabilities and equity. It's possible, right? So we have to build a system. We have to build what I call reconciling reports. These are reports where like, hey, why don't we do a report on all transactions that have no business tied to them? Now it should come up blank, but if it doesn't, that's a transaction we got to look into, right? And so we train either our VA or bookkeeper, whatever, ourselves to fix those things. So it takes a system. It takes some discipline as well. And there's way more that we have time for today, but it is something you should at least be aware of that would potentially be a game changer. If you can take a client who has 17 different logins and their stuff is a complete mess, first of all, you're going to get a really good like project fee for fixing it because it's not easy to fix, right? So a single project fee, and then the fact that you could now maintain that as a bookkeeper or an accountant, you're going to really have them singing your praises because you brought them into one login, everything's in one place.
Yeah, I have one client that had like 12 QBO plus subscriptions. That's $1,200 a month, right? So if you can, as an accountant, you can manage QBO Advanced $200 plus or whatever, you're still $1,000 just on software subscription. You're not paying into it. You still have $1,000 of margin there that they can invest in your services rather than paying the software company. So like, would you prefer the customer to pay an extra $1,000 to the software company or pay you the $1,000 so you can provide all this great decision making value? I would be on the side of the latter. So I think that's what you meant by that's where the opportunity for profit is.
For sure. Yeah. You're kind of stepping aside from the status quo, like thinking about the unique needs of this industry and this niche. And what's cool about it is, being in this niche is we're ready to hire professionals to do stuff that we're not good at, And the last thing that you want a real estate investor to do is to hire a bookkeeper and then they log in, they're like, what is going on? What am I paying for? I can't see what I need to see. But if we can instead turn the tables on that and just unlock, like, here's all these reports. And by the way, here's this business compared to this business, this property compared to the other. Wow. Okay. In one place. Now I feel better about what I'm paying for the software. I feel great about what I'm paying for that professional who taught me and set this up. So
yeah,
that's what we're looking
for. The reality is you can be a CPA, a bookkeeper, doing stellar, flawless accounting work, and the client not see it, not understand it, because they cannot take actions from it. That example of the project that you showed me, that's paradigm shifting to me, because it hadn't even occurred to me that I have this hidden dimension of job profitability that I can use for my clients. So Nick, we're getting ready to wrap up. Yeah. Walk us through all the resources that you make available. I know you have a course, which is like your main course that you teach. Tell us about your course and like what are all the topics that you cover in the course.
Yeah, let me get to that. So, and I really appreciate you. Let me go through those. Those are kind of like those three big things that I see often that are big game changers. So, thank you. I appreciate that opportunity. And you're right, I do have some cool stuff available. So, we're watching this. You're stuck with us in this really geeked out session because we want to better serve our investing clients. We see the potential. I'm telling you, this niche is super lucrative. People are willing to spend money, and we want to take our skills to the next level. So what we can do, and I'm kind of going through this quick, is we either stay the status quo or we commit to investing in ourselves to get there. And I can help you do that with my signature course. I have a course called Real Estate Accounting Bootcamp. I'll take just a few minutes to talk about it. And we're seeing tremendous success with it. So what this is, it's a self-paced online course that teaches you how to set up QuickBooks Online for your real estate investing clients, not only to get it set up, but to help them grow. And so then you can get more clients, get more revenue for your own bookkeeping business. And we're seeing this with all the students within the course. All right. So it's set up with the core course, Real Estate Accounting Bootcamp, is 6 modules. We talk about the setup, REI basics, purchasing a property. We talk about cash, hard money, all those nuances, projects and capital improvements. That's where we dive into the cost codes. Operating the real estate investing business, we talk about dealing with tenants, we deal with security deposits, selling and refinancing. So even if we're not flipping, we might not be selling frequently, you're gonna have a lot of rental investors who are refinancing and dealing with that. And then reports in advance. That to me is the most important. If you can deliver to your clients the proper reports, it's going to be game changing. So we have that available with some awesome bonuses as well. Okay. So in addition to that course, which again, self-paced, you can do it as much as you want to. You can do it at your own leisure. You can do it twice, 3 times, 4 times, whatever. I'm throwing in, because I do a lot of demonstrating in Google Sheets. Not that we want to bring our data outside of there, but your clients are going to have a lot of Excel, Google Sheet stuff. I have a little mini course called Google Sheets Crash Course. That's yours if you want to check that out as well. I've been getting a lot of good feedback on some of the stuff I do within Google Sheets. So that is available as well. That's included. Second is you're going to get free access to the REAB community, the Real Estate Accounting Bootcamp community. So this community is made up of everybody who has taken the course. And so this is many, many bookkeepers as well as some investors. So what's really cool about this is we have a lot of investors who go through the course so that they can do it themselves. And then they don't want to do it themselves anymore, right? And so they're looking to hire a bookkeeper. And so this community is, one, a place where you can ask questions, and I'm there monitoring that and helping folks through the course content. We can also communicate with others. And so there's every single day we get a request, hey, is there any bookkeepers out there looking for this market and this kind of flipping or investing? And you can connect with them. You can gain clients. You're going to get free access to that. And lastly, this third bonus, which we're doing kind of an exclusive extension on this for Hector here, is access to REAB Plus. So REAB Plus is kind of a subset of our community. It's a more exclusive community where we hold bi-weekly live Q&As. So that's with me, where we're answering any questions we have, like we dig into location tracking, business tracking, as well as I publish every other week, I publish exclusive trainings. What I'm doing with that is I'm taking my actual deals that I do, properties that I'm buying, and I'm showing you the financials on that. I'm showing you how I'm entering them into QuickBooks Online. I'm showing you how I'm prepping for taxes. And this is kind of taking the curtain back. Instead of it being like fake deals, like I was kind of showing today, and more hypothetical, you're literally seeing my actual deals in QuickBooks Online. And so we're extending that. It's usually a 30-day. We're going to do 6-month free access to that. So you're going to get up to 12 Q&As with me. See if you want to hang out there. All right. So this entire thing, we usually sell it for $797 as a one-time fee. We're going to do everything for, again, $697. So I so appreciate your attention. I appreciate being on with Hector as well, because I know if you're watching this, you're advanced, you're committed to bettering yourself, and you're committed to increasing your skills so that you can better serve your clients, whoever they are. I hope they're real estate investors and builders, because we need you. We need good bookkeepers and accountants out there. And so I appreciate you providing me that opportunity. We'd love to have you in the course. And
Yeah,
after any
awesome,
questions you
man.
have about it, I can certainly answer them. We do actually we do have a money back guarantee as well. So if you're not sure if it's for you, you're not sure if you'd like my teaching style, just give it a shot. I have no interest in keeping your money if it's not for you. I really, really am just trying to provide value here. So no questions asked, 30-day money back. All right. Hector, any questions about
Yeah,
this or
I
anything?
was actually about to ask that question if there's any guarantees or any like free. Some, like here in the chat, people are saying, "Is there a free trial?" No, there's no free trial. But you answer the question. Like you pay for it. You got 30 days to access it. If you don't think it's valuable, you give the money back. I always respect that, Nick, 100%. And there's always a percentage of people that, for whatever reason, the expectation wasn't there, and you got to do it.
Yeah.
Let me ask you a question because this is like the hardest thing for me to teach is actual real deals. Like people ask me all the time, Hector, why don't you make generic videos about how to record a purchase of a real estate with an actual HUD statement, with an actual Alta statement? And the reality is, like for accountants, we freak out about using our clients' personal information to publish a YouTube video. So what I like about what you're doing is, and you're obviously so not an accountant, that you're saying, I'm an investor. I'm going to show you my deals. I'm not going to put my social security number out there, but I don't care if you know the address of the property that I'm buying. So I'll show you the actual document of what I bought and what I bought it for and what I paid and what was the fee and how much money was in escrow and how much money came back later and how much money was deposited before and how much we negotiated during the closing and how much, seller credit we got and how all those moving parts essentially affect the journal entry. And like you actually walking people through that is extremely helpful. And I just want to give you, I want to give you a shout out for being a non-accountant that knows a heck a lot more about accounting for real estate than a lot of the accountants that I know. So good job. Keep up with what you're doing. Nick, I'll put all the links in the descriptions, copies of the slides, of all the free resources. Like I think it was the chart of accounts
Yep.
and the cost code
That's right.
schedule.
Yep.
And with that being said, no more questions in the chat. Thank you very much. We'll wrap it up.
Thanks so much. Great to be here. Really appreciate it.
Bye bye.